Well, I'm coming to you this morning from beautiful Morro Bay, California, the bottom of the most beautiful highway in the world, Highway 1, between Morro Bay and unfortunately only gets as far as Big Sur because the road broke. So that we'll be driving up that road and back down that road today. We'll let you know tomorrow if it's still as beautiful as it was last time. Speaking of beautiful, the beautiful is what's happening with the earnings this quarter and pretty much everything else in the Trump economy. But there's just no more room at the top for the S&P. I mean, what's it going to do? It's at 22 times earnings. The earnings numbers are coming in at record, breaking above expectations by record numbers on almost every metric. But the S&P and the Dow's actually down this morning. Let's see, last time I checked, I think the S&P is down. The Nasdaq's up a little bit on strong Apple information this morning from the president. But basically, how are we going to go above 22? So I don't know. I can't really tell you. I can't remember other markets where we've been bouncing up against 22 PE on the S&P, and the economy is potentially going to get just stronger. And so, what do you do? I don't know. We're going to find out, I guess. Meanwhile, Tesla's down a little bit this morning too. But there's no bad news and only good news. This is from Sawyer Merritt, Morgan Stanley's Adam Jonas, in a new note. He says, we estimate one humanoid robot at $5 an hour can do the work of two humans at $25 an hour, generating an NPV of $200,000 per humanoid. One robot car can potentially drive down cost of per mile of a car ride share at 20 cents a mile. The marginal cost of your personal C3PO robot could over time approach the marginal cost of power. You can't have GPUs without BTUs. Therefore, of course, that's why everybody is building all of the above BTUs and GPUs and autonomous vehicles and humanoid robots, all of which will be tremendous productivity generators in the future. This morning, Tesla is trading just above key levels, according to Investors Business Daily, just below key levels, but could be poised to offer investors a buy point in a stock market trade after popping nearly 4% on Wednesday, as CEO Elon Musk teased a significant full self-driving update, perhaps at the end of September. I didn't read the end of September into that. I read anytime. No telling. Could be end of August. Tesla advanced 3.6% yesterday to 319.92. It's down a bit this morning, trading just below its 50-day and its 200-day moving averages during Wednesday's stock market. Tesla stock was essentially flat before the stock market opened this morning and continues to be relatively flat. A decisive move above the 50-day and 200-day lines could offer a trend line entry, or alternatively 338 could be another early entry, according to Market Surge Analysis. Musk on Wednesday said that Tesla is training a new full self-driving, or FSD, update, which could be a big improvement, but he didn't say when. Probably ready for public release this is what they're talking about then. Probably that's going to be ready for public release the end of next month if testing goes well. Tesla stock is still in a new base with a traditional $367.71 buy point, which is what they've been saying now for several weeks. That base within a much larger consolidation. However, the relative strength line has lagged for several weeks, reflecting somewhat lagging Tesla performance versus the S&P 500. This is a Tesla stock trend. It says here Tesla shares fell 4.25 last week amid broad market selling, and a Tesla officially expanded its test ride hailing service in the Bay Area. We know all that. In Austin, Texas, the limited Robotaxi ride-hailing service has a safety operator in the front passenger seat, as we know. A relatively small number of ride-hailing cars are out there, and the stocks initially soared after the Robotaxi launch, but has come back because it wasn't as exciting as everybody thought in terms of being a full-on service. Now, it might be exciting to you and me, but you got to remember, not everybody's as bullish as we are. As of Wednesday's close, Tesla stock was up 34% since the April 22 conference call, which lifted all the bets. Shares are down about 21% for the year and 34 below their all-time high of 488.54, which Randy missed a couple of calls on that one. Tesla stock has a 21-day average true range of 3.87%. The ATR metric available in IBD's market search charting tool gauges the characteristic breadth of a stock's behavior. Investors can keep Tesla stock has a 59 composite rating out of the best possible 99. The stock also has an 83 relative strength rating and a 56% EPS rating. But Barron's says it this way: the gains have made Tesla stock look stronger technically, according to FundStrat head Mark Newton. He says the relative strength could be a sign to traders to add to their positions now. Relative strength is a momentum indicator used by traders that essentially means investor sentiment has started to improve. The other thing you can think about Tesla right now is the rest of the S&P is at 22x. So lots and lots of stocks are at their all-time highs. Lots and lots of stocks have already, pulled as far ahead as they're going to pull ahead. And so investors will be looking for other opportunities, and Tesla will be one that is trailing maybe expectations at this point. Fairlead Strategies founder and market technician Katie Stockton says the Tesla stock has been stuck close to its 200-day moving average for a while. That could cap any rally around 330, which we've seen a couple of times, unless something changes to excite investors. Oh, like taking out the safety driver. Safety rider. I keep changing. Yeah. Expanding Tesla's Robotaxi service to more cities could be a catalyst. Tesla launched the self-driving shares were about 322 before the launch, and that's pretty much where they are. Coming into Thursday's Tesla stock was down about 21% year to date, but about 67% up over the past 12 months, which is another one of those weird things. Why do we care about the last 12 months or the last 6 months or since the beginning of the year? They're just arbitrary places to take our analysis. Okay, this is Randy Kirk. Hit like today because you like the fact I'm going to not be giving you any more things to listen to the rest of the day. Yeah, I'm going to be traveling up the coast and back. And so, nope, not going to hear from me until tomorrow morning at something around this time when we will be in beautiful Pismo Beach. You could hit Patreon too. That would be lovely. Or you could subscribe and hit notify to notify you about tomorrow morning's show. In the week ending August 2nd, the advanced figure for seasonally adjusted initial jobless claims was 226,000, which was an increase of 7,000 from the last week's revised level that was revised up by 1,000. The 4-week moving average was 220,000. It's a decrease of 500. So I would say, it's been 205 to 240 for 2 years. I don't know, maybe longer, maybe 3 years. The total number of continued weeks claimed for benefits and all programs for the week ending July 19th was 2,036,000, which was a decrease. Now, that's a good news piece that we have few people that are finding jobs, apparently, better than they were the previous week. But you have people out there that are complaining and saying that the headlines are yelling about the insured claims being the highest since November 2021, which it said in the report, to be honest. But let me read you the report. The advanced seasonally adjusted insured unemployment rate was 1.3% for the week ending July 26, unchanged from the previous week's unrevised rate. And by the way, 1.3% is what it's been, again, for weeks and weeks and weeks. It never changes. I watch it every single week. Sometimes I report it, sometimes I don't, because it's always the same, 1.3%. The advanced number for seasonally adjusted uninsured employment during the week ended July 2026 was 1,974,000, which is an increase of 38,000 from the previous week's revised level. And that's the highest level for insured employment since November 6, 2021, when it was 2,041,000. The previous week's level was revised down by 10,000 to 1.946, 1,946,000. And so what you're seeing here is, once again, oh, look, we've got this one data point. Out of all the good data points, we're going to concentrate on this bad data point, which, by the way, was revised dramatically last week, and who knows, maybe revised dramatically next week. Okay, so then we have the productivity numbers. So non-farm business sector labor productivity increased by 2.4% in the second quarter of 2025. This output increased, I'm sorry, output increased by 3.7%. Hours worked increased by 1.3%. That's really good. And that was all an increase from a quarter from last year's second quarter. Unit labor costs in the non-farm business sector increased to 1.6% in the second quarter, reflecting a 4% increase in hourly compensation and a 2.4% increase in productivity. So you've got really solid numbers across the board. Labor cost increased by 2.6%. That's excellent over the last 4 quarters. That would be totally within the range that the Fed is looking for. So I don't know, again, these are really, really, really good numbers, and you would think that the market would respond to that in a very positive way, except where is it going to go? Barron says the second quarter's jump was much stronger than the 2% gain that economists surveyed by FactSet had expected. Productivity growth was revised to a decline of 1.8% in the first quarter, according to BLS. Okay, that would have been maybe because of again, we know that we had the situation in the first quarter on productivity numbers that were impacted by the imports and exports. Productivity growth is settling back into a historic trend after bouncing around because of the pandemic. In the first half of the year, labor productivity has followed a similar trajectory as gross domestic product growth, which contracted in the first quarter and then jumped up to 3%, as we know, in the second quarter. Productivity numbers are extremely noisy at the best of times, writes Oliver Allen, senior U.S. economist at Pantheon Macroeconomics. But the 2.4 increase in the second quarter probably was flattened by tariff-related distortions that we just talked about. He says, anyway, the trend looks reasonably strong. We've got the trueflation this morning at 1.75. It's been hanging around that 1.67, 1.75 now for a week. 2.05 year over year, still a super strong number. By the way, next week we get CPI, we get PPI next week. We've got the President of the United States sitting at 47% this morning. No change on the GDP, the Atlanta Fed GDP number, because it changes today, but it must be late in the day because it wasn't changed when I look. I'll give you that number tomorrow. So we have and we have the VIX has come, well, it's up a little bit right now, but it's down from where it was. It's down to 17 again after being at 21, earlier, I think earlier this week, the end of last week or going into this week. The markets are improving a little bit, although the Dow is continuing down. It's down 325. The NASDAQ continues down. No, it's not really improving at all. I'm sorry. Let me revise that. So the Dow, the NASDAQ, and the S&P are all headed down. Tesla's the one that improved. It was down more. So let's look at the percentages here. We got the Dow is down 0.74, S&P down 0.13, and NASDAQ still up 0.40, with Tesla down 0.33%, but moving upward right now. We've got the Magnificent Seven completely mixed, 2 down and 3 up. Apple in particular is up 3%. NVIDIA recovering a little bit, but actually heading down as well. We've got the Cathie Woods 100% half red, half green. And the bonds, last time I checked, were headed down. Let's see if that has continued. Yes, we've got them down 0.7 of a basis point to 4.225. Obviously, you know what I want to happen there. Oil down 36 cents. We're now down under $64 at $63.99. Natural gas down 0.71, headed back to under $3. Again, we're sitting at $3.05. Gold back up, continuing up, $16.70. That's 0.49% at $3,450. Silver up a full percent, $38.28. Remember, I think all-time high is $39.50 on that. And copper, it seems to be settling in at around $4.40. So we'll call that the new break even and see where it goes from here. And we've got Bitcoin. Whoops, it just changed on me here. We've got Bitcoin up 1471 at 116,789. That's the first kind of positive move we've seen, I think, on Bitcoin all this week. And that would be all of the numbers that are fit to print. So I have nothing to talk about in terms of the rest of the day. I have nothing to talk about in terms of something for you to go back and look at from yesterday. So I guess it's time to just say, I hope you appreciate the opportunity that I have to go watch this beautiful coastline again today. It's been great talking to you.